The Australian dollar stuck its nose above 72 US cents for a couple of hours today and is currently just under that level. But basically it's back to where it was at the start of last year, around 72 US cents, due to US dollar weakness and the strength of the iron ore price. Now the Reserve Bank will be very keen to make sure it doesn't go up too much from here, which would hinder Australia's economic recovery. So if the US dollar keeps falling, something might have to be done, like cutting interest rates even further than they are now. There was a research paper from the RBA out today that argued that although household debt in Australia is very high, partly because interest rates are so low, it should not cause a banking crisis, even if employment fell 8% and house prices fell 40%, which it calls an extreme but plausible scenario. Now here's a graph from the paper of Australia's household debt to income ratio versus the global median. So it's 200% against about 130% globally. But note that it was below the global median in the 1980s. Today's data release was construction for the June quarter, and residential work done has now fallen about 20%. The share market fell today mainly because the banks were sold after some big gains yesterday. Buy now, pay later firm Zip jumped 28% after it announced a partnership with eBay. Telstra went ex-dividend, and Whitehaven Coal's profit caved in, down 95%, so the shares lost 18%. Wall Street kept powering ahead, but other global markets had a down day, and among commodities, oil went up, copper and gold were pretty flat, and iron ore fell. And that's finance. Thanks for watching. You can check out more finance news by clicking there, and don't forget to click subscribe down there to get all the latest updates from ABC News.